Hi, this is Russell Gray, co-host of the Real Estate Guys radio show with another edition of Boots on the Ground. And today we're going to be taking a look at the southeast part of the United States in northeast Florida and in southern Georgia with Chris Funk from Southern Impression Homes. Hi, Chris.
Hey there. How are you, sir?
I'm good. I'm excited to hear from you. You know, we did a Boots on the Ground together in May, and we were in the middle of the big rollout and trying to figure out what the world was going to look like in this COVID-19, what I call a four-phase cascading crisis. And, you know, it's really interesting because a lot of these interviews that I've been doing have been really quite positive. People have had good results, good occupancies, good rent collections. It just seems like a lot of the doom and gloom that people have felt was going to be coming hasn't hit yet. So I'm interested to hear what is going on. First, just kind of bring us up to speed on the markets that you're in and just kind of the nickel tour of what's going on in them from your point of view.
Sure. So we build in Jacksonville, Atlanta, Palm Coast, which is in Florida, south, just about an hour and a half south of Jacksonville, Ocala, which is also in Florida, and then Cape Coral and Fort Myers, which are in Southwest Florida.
Oh, okay. So not just Northeast Florida. Okay. I know Cape Coral and Fort Myers very well.
Yeah, those have been great markets for us.
Okay.
And so we're seeing, you know, about the same thing across the board in all of these markets. The COVID crisis has been good to real estate people in general. So as you know, we build for rent, and then we also develop lots and sell to national home builders. So, you know, one of the things that has been kind of striking to me is that on the rental side of things, we've had an absolute, you know, bonanza of rentals going on. We've never rented houses this fast in the history of our company.
Well, you guys are on the opposite end of what's going on in New York, right? Where everybody is fleeing. Do you have any indication, like from a demographic, where these people are coming from?
We actually do. So we are in the process of going back through our history to determine what percentage of our tenant population is normally coming from out of state. But in the past 3 months, 17% of our new tenants have come from out of state. So I don't know what the previous number is yet to be able to give you a true variance there, but 17% feels like a lot of people to be coming and renting houses from out of state.
Yeah, nearly 1 out of every 5.
Exactly. So what, you know, this is what's driving what we're seeing is the national home builders are very busy. So, you know, we sell lots to national home builders, and they are buying lots as fast as they possibly can to sell to their retail home buyers. We obviously are building for rent, and we're leasing the houses faster than we can put them up right now. So, you know, in these growth markets, which almost all of Florida is a growth market, and of course Atlanta is a growth market. You know, we see people fleeing from up north coming down. So we know that some percentage of this increase on both sides, the retail home sales and the rental lease up, is coming from out of state population. But you know, there's some other things that we still don't know yet. You know, why are things leasing and selling so much faster other than these other variables? So, you know, we're continuously doing research to figure that out. But in the meantime, we are thrilled to see what's happening on the real estate side of things in Florida and Georgia. And then obviously, you know, some portion of this is fueled by, you know, phenomenally low interest rates. You know, we actually had a record month in July for new sales. And, you know, most of that is because, you know, our investors are just locking in at just incredibly low interest rates. You know, some of our folks are able to get up to 10 properties on their personal name through the Fannie and Freddie programs. With what we sell single family, duplex, triplex, and quadruplex. So the neat thing about that program is if you buy 10 duplexes, it still works. You know, you can buy 10 single family homes, 10 duplexes, or 10 quadruplexes, or any mixture thereof, because as long as it's less than 4 units, Fannie and Freddie look at it as one building.
Yeah.
So that's been fantastic, because those are 30-year, you know, fully amortized loans. We've obviously had to move into commercial loans for, for our own portfolio. And I just refied one of our personal portfolios at 3.79%.
Amazing.
So the cash flow just absolutely screams when they are giving money away that cheap.
Yeah,
So,
well, I mean, and here's the thing. I mean, because you've also got a lot of people that are hesitating, and we've said repeatedly a couple themes that are happening. We just got done with our crisis investing webinar series, so we have 13 video series. We interviewed a whole bunch of big name economic folks, but we also talked to Kenny McElroy. I think he was video number 12 or 11, who's right before Robert Kiyosaki, who kind of wrapped the whole thing up. But, Kenny was just talking about how, there's winners and losers. And he's obviously seeing some marketplaces that are actually winning as a result of what's going on. And this is something we've been talking about since forever. After 2008, we said, okay, now we've learned, and we can see that even though the talking heads on mainstream financial TV talk about they talk about real estate kind of at the macro level, and they put it all in a blender and use national averages, which don't mean anything in the real world at all. Because, or you see these horror stories about how the real estate market's imploding because of New York. Well, New York is certainly not indicative of what's going on out there on Main Street. And so what's happening on Main Street appears to be really good, because markets like Florida are winning. People who can understand what's coming are jumping into real assets, and real estate in particular. That's winning. Residential real estate in particular. Well, office, hospitality, retail. I mean, some of those areas are really struggling, but people are really now saying, well, my home's pretty important to me. I work here. I work out here. I'm homeschooling my children here. I mean, it's kind of a big deal. So interesting, very, very interesting. So what else are you seeing out there?
well, let's see. Like I said, the interesting thing to me was the fact that every aspect of the residential is so very busy. It's it's still kind of hard for my mind to wrap around with with the amount of of inventory coming online. But I think to your point, it is time to put the pedal down. I'm personally putting the pedal down on new builds for myself as well as our clients, because there is some lag time there. We still have to build the house.
Yeah,
So
Kenny's building. He just closed on three land parcels, and they're building apartment buildings like crazy.
yep, and that's really the thing that we're looking at, is because there is such a lead time to build these things, that we want to get them built prior to these interest rates potentially going back up. Hopefully they're going to stay down for at least another year, so that we in the real estate market can take advantage of this. But with with all the money that's being thrown at the country from the government, there is this concern in the back of everyone's head of inflation. And of course, the best way to combat inflation is to have real estate that's locked in on a super low interest rate for a 30-year time period.
Yeah, that's the key. I mean, and it's such an important point. I'm the financial strategist on the show, and people are so funny because some folks are just debt averse. And I'm like, you don't understand. Debt is how you short the dollar. I mean, the appeal of real estate isn't the real estate, it's the debt. You get the debt and the tax breaks and the rental income to service the debt, then you're able to go purchase an asset that has an income stream attached to it that is going to be indexed more or less to inflation. Yes, I totally understand that when inflation hits working class people, it makes it difficult for them in the short term. But in the long term, that inflation eventually has to work its way into wages or everything falls apart. I mean, it has to happen. And so there's a little bit of pain in the lag, but you can make up for that with, we got bonus depreciation right now. We've got super low interest rates, to your point. And so, and especially when you're talking about new build, the thing that I love about what you guys do is this stuff's brand new. As an investor, if I go buy a 30-year-old house, even if somebody did a great job rehabbing it, it's still a 30-year-old house. Now, you can say, well, they don't make them the way they used to. That's true. But still, I mean, I don't know any turnkey providers that provide like a 10 10-year home builder's warranty or anything like that. The idea that with a new build, at least you're not dealing with deferred maintenance, and you're going to have somebody, the builder, presumably standing behind it at least for some period of time. And that mitigates a little bit of that cash flow concern in the early portion of the ownership when it's the most difficult. And then later on, as inflation, to your point, kicks in, the rents start to come up. It becomes a little bit easier to control. And you've already locked in your biggest underlying cost, which is the debt.
Yeah, and to your point on the rent and the rent growth, this year we've experienced 8% rent growth on turnovers.
Yeah,
So
and that's not inflation. That's a market dynamic of
that's
supply and demand because you are in a hot market.
exactly. So this rent growth has been phenomenal, and then again to your point on the new construction aspect as well. It really is built better. The insurance companies have even taken note that the new construction product is built better because it's built to current codes than 1950s or 60s or 70s or 80s houses. So you actually get a discount on your insurance because the properties are new construction.
Well, yeah,
Versus
and if
older
you're a
construction.
tenant, would you rather live in an old house or a new house?
Well, and that's one of the things that, it hasn't really flushed out yet as to how much rent growth some of the older homes are seeing. But, we tend to believe, and this is anecdotally just from talking to our tenants, that people are seeing that they're going to be in their houses a lot more because of the COVID crisis. So, all of our houses are built with granite countertops and the faux wood vinyl plank floors that look like wood, and they're brand new. They smell brand new. They look brand new. Everything's up to date. The air conditioning works. The roof's brand new. So the tenants, if you're going to be stuck in your house, you want to be stuck in a pretty house.
Yeah.
And so, anecdotally, we've heard from our leasing agents that, people are moving out of older houses into newer houses because they just look better and they're going to see a lot more of them. So the stuff that irritates them in their older home just irritates them that much more when they look at it every single day.
Yeah,
so,
absolutely.
so,
Hey, well, all that is really good. So you've got good rental growth, you've got good demand, great interest rates, so cash flows from the acquisition standpoint, and of course, as I mentioned, the tax breaks. What else you got going on? Good or bad? Kind of market dynamics that you think people need to know about? Maybe anything that's shifted or changed.
well, I
What about
think,
the eviction? When you do get bad debt, I know Florida's generally a landlord-friendly state, but of course, everybody is very much on this bandwagon of at least paying lip service to perfecting or protecting tenants. Are you having any impact on any of that in terms of your ability to get the non-payers out?
so there is something in the works right now for the non-payers that they actually have to provide evidence that they were impacted by COVID-19 in order for them to
So it's
not be
not
able
just
to.
a blank check.
Exactly. So, so we're moving towards that direction of the government allowing us to actually make, them thinking like a business as opposed to just giving a broad stroke to everybody. So, the odd thing though is we're just not experiencing that much delinquency at this point in time. There's not a lot of new people becoming delinquent every month. So our delinquency rate is increasing a little every month, but it's only increasing by the people that we can't get out because we can't write off their bad debt until we get them out of the house.
Right.
So, normally we would get them out in 30 days. Florida and Georgia are very landlord friendly, states. So if they're not, if they're not paying, we can get them out in 30 to 45 days. Well, now because those, we've got a very small portion of the tenant population that isn't paying, then that balance for that individual person grows every month. So overall, even with that, we're still over a 93% collection rate. And if you backed out the time period for the folks that are just in there and their balance continues to accrue, we're up closer to 96%, which is still only about 2% off of where we were pre-COVID.
Yeah.
But as I mentioned, we've had 8% rent growth in turnover during this time period, and we've had a 3% increase in occupancy during this time period. So the net effect is still a significantly higher economic occupancy, even with the little bit of additional delinquency that we've seen.
What about the property prices? What's happening there? Are you seeing prices go up? Are they going up faster than rents? Are they staying steady? Are they going down? Are there any trends there just from the pricing
So
perspective?
yeah, pricing, obviously supply and demand, and there are way more buyers in the market right now than there are sellers. So like I mentioned before, the national home builders are having record months. I won't say the one that I'm talking about, but I spoke to one of the regional guys here of one of the largest national home builders in the country, and they reached their highest all-time sales in 10 months of their fiscal year. So in the first 10 months of their fiscal year, they beat their all-time annual record. So, and a lot of that happened since COVID, you know, so, these guys are experiencing just, really big spikes in their sales, which obviously is driving prices up. Now for us, we are a supplier of rental product for yield. So, we try to pass along any discount that we're able to achieve to our
Well, you
customers.
have to because the numbers have to make sense. Of course, you've got the interest rates in your favor, so that helps a little bit too. But that's the thing I like about working with someone like you, Chris, is because you're focused on the long term, right? I mean, if you've got somebody who's going to be one and done like a retail buyer and you're not going to sell them something again, maybe ever, or maybe 3 to 5 years from now, that's a lot different than somebody that's going to come in and say, hey, husband and wife, and we're each going to try to get to 10 properties each on Fannie Freddie, and I'm a 20 person buyer, and as soon as I have equity, I'm going to pull it out and buy another one.
Yep. And that's exactly what we look for. Our mantra here at Suncoast, which is our property management, and SI Homes, which is our building arm, we all, work very closely together. So, our goal is to be able to make our investors profit. So
Yeah.
we make them positive cash flow in every possible way, shape, or form. So it starts at the beginning when we design the home with tenants in mind. So the hard surfaces, like I mentioned, to keep down costs when turnover happens, to making sure that our leasing department and our turn department are doing that rapidly when those things occur, so that we are getting tenants back in the house, and then maintaining them for the long run. So we have to manage these properties hopefully forever. So 98% of our landlords stay with us after the first 2 years of their contract.
Yeah, and that again is another great point, right? Because if you can't deliver positive cash flows to your investors, you don't have a property management, recurring income model. So I love the model that you have, the business model that you have, because it really aligns the interest of the investor with the interest of you as the builder, because you're also the property manager. Builder and property manager kind of go together. And yeah, so anyway, we talked about all that. So what I'm going to do is put a link to the last time you appeared on the Real Estate Guys radio show in the show notes below. I'll also put a link to your Jacksonville market report that you did for us. I know that the last time we spoke, you were just updating that. I think it was updated in May of 2020 for the whole COVID-19 thing. So if you have any additional updates, get that to the team and we'll update the report there too. And then, of course, I'll put a link to your contact page so people, if they want to reach out to you and learn a little bit more about what's going on in the market you're in, or how to get in on what sounds like exciting action. I did an interview with another Florida correspondent down in Central Florida, and they were same thing. They were just said it's just amazing. You wouldn't even know that there is an economic crisis going on. I mean, so again, winners and losers, and it seems like Florida, as far as we can tell, is much more on the winning end of the dynamic of what's going on in the country right now than say a New York
Yeah.
is, or some of these other cities. Okay, so
Yes.
Chris, any closing thoughts before we wrap up here?
No, I think that's everything. We're just counting our blessings down here this COVID has not damaged the real estate market down here in Florida and Georgia. And you mentioned market reports. We're going to get some updated market reports for our Atlanta and Southwest Florida markets over to you. So those should be in the library at the Real Estate Guys Radio here shortly.
Great. Love it. Well, thanks so much for your time today, Chris. Keep up the good work, and we'll catch up with you in the next edition of Boots on the Ground for, I can't just say Jacksonville now, so I'll just say the kind of the Southeast United States, because that's kind of where you're at.
Sounds good, sir. Great to
Okay.
see you.
All right, buddy. Thank you so much.
Thanks.